Welcome to Share Talk, the only podcast where investors come first.
Another interesting week. RockRose Energy issued an operations update. Cash at close of business on 25 March was £287 million, of which £248 million was unrestricted. They anticipate unit operating costs of around $30 per barrel of oil equivalent in 2020, and at least $50 million capital expenditure will be deferred. Current market capitalisation is £85 million. Hurricane Energy reconfirmed that it has a strong balance sheet, including $164.3 million of unrestricted cash at 18 March, and is in a strong position to weather this current downturn. However, it warned that should this change in the market environment persist, it is likely to have a material impact on their capacity to fund capital expenditure. A further concern was the announcement on Friday that a crew member on the floating production storage and offloading vessel at the Lancaster field had been evacuated to the mainland for medical reasons and subsequently tested positive for COVID-19. Their current market capitalisation is £213 million. Gulf Keystone Petroleum announced an operational and corporate update, confirming that at current production levels, the company covers all operating, general and administrative costs and interest payments with a Brent price of around $35 per barrel. Production currently is around 38,000 barrels of oil per day, and the balance sheet is strong, with cash of $154 million at 23 March and no debt repayment until mid-2023. Current market capitalisation is £135 million. Bahamas Petroleum Company has delayed drilling again. Reality is it doesn't have the cash and little chance of obtaining it via the convertible loan note route. To save the day, since its licences expire at the end of the year, it's claiming that the coronavirus constitutes a force majeure event under the terms of the licences and has notified the government of the Bahamas of such. They say it is expected to result in a corresponding extension to the term of the licences. Whatever the outcome, though, I don't think there's going to be a drill this year. Lekoil issued a slightly curious announcement that they're in the process of making the agreed payment of $2 million for OPL 310 in accordance with the agreement reached and announced by the company on 21 January. They say they've given instructions for the payment to be made by their bank and will provide a further update when this process is completed. The wording here reminds me a little of Providence Resources and their China payment. UK Oil and Gas announced that it has filed a planning application with the Isle of Wight Council for the appraisal, drilling and flow testing of the Arraton oil discovery, which is a geological analogue of the Horse Hill oil field, containing calculated aggregate gross P50 oil in place of 127 million barrels. It makes for an interesting addition. The Parkmead Group announced interim results. Gas prices have fallen from highs of approximately €25.70 per megawatt hour in October 2018 to lows not seen in over a decade of around €8.60 per megawatt hour in February 2020 due to the oversupply of liquefied natural gas into the European market. They've moved from an operating profit in the 6 months ended 31 December 2018 of nearly £4 million to an operating loss of £1.5 million in the 6 months ended 31 December 2019. Let's now see if they can make the money back from wind power on the piece of land in Scotland they bought from the chairman's wife. Petromat had announced an operational update. They're progressing the Block 20 exploitation licence application, and a new CPR increases the total mean unrisked in-place oil resource potential of the Heron structure by 20% to 194 million barrels. Reservoir stimulation studies indicate significant improvements in the recovery factor are possible, and the Heron development base case has increased to 33 million barrels recoverable. Challenge is whether they will actually be able to get any further work done this year with the current coronavirus situation. Block Energy acquired 2 blocks in Georgia from Schlumberger for no cash. Reality with this deal is that Schlumberger has successfully binned what they, as experts in such matters, regard as liabilities. Blow have got the same social media pumpers on it as last time, so perhaps brace for another placing from this one, although perhaps not, since with the credibility of both the company and the pumpers shot after last year's false production number claims, the initial ramp appears to have failed miserably. Pantheon Resources announced upgraded resource estimates. The shallowest horizon now is estimated to contain 1.8 billion barrels of oil in place and a P50 technically recoverable resource of 483 million barrels of oil. They're impressive numbers, but will they be able to achieve a farm out is now the question. TLOU Energy issued a response to the prevailing financial market conditions. Main point is that directors are reducing their salaries by 50%. No such luck for shareholders at Eco Energy. They're just asking the holders of its debts to defer all cash interest payments through 2020. There were other announcements from old favourites Anglo-African Oil and Gas, Ascent Resources and Zenith Energy too. But I'm not sure that other than the comedy aspect, there's that much interest anymore in what are openly non-viable companies. What there is interest in is the new special trading course, and I'd suggest that you at least read the details about it at allnewslondon.com/trading. I'm confident it will be of significant benefit to you. If you're here because you're interested in making money, the trading course is for you. It's all about eliminating losses and going for the certainties which make you the profits. In the context of the amount people risk and regularly lose, it's not at all expensive. A bargain, in fact, to learn all the things I know and profit yourself from that knowledge. Link again is allnewslondon.com/trading.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.